Good morning. The last session, we discussed straight line method, meaning definitions, advantages, limitations, and also general entries, plus ledger accounts. Next, another important methods of depreciation is reducing balance method or written down value method. So, what is the meaning of reducing balance method? So under this method, depreciation is charged at a fixed percentage on the diminishing value, reducing value, or written down value of the asset. For instance, if the original cost of the asset is rupees 10,000 and if the depreciation is 10% per annum, then in the first year depreciation will be charged on 10,000, in the second year on rupees 10,000 minus 1,000, so 9,000, and in the third year, so rupees 9,000 minus 900, so 8,100. So the amount of depreciation charged will be reduced year after year. Formula for calculating the depreciation under this method. So formula, the rate of depreciation to be charged annually under the written down value method can be calculated with the help of the following formula. R equals 1 minus nth root of S minus C, S divided by C into 100. When R equals rate of depreciation, N equals number of years expected life, S equals scrap value or salvage, C equals cost of acquisition of the asset. So what are the advantages of this method? The advantages of these methods are, first one, it is simple and easy to understand and operate. This method is recognized under the Income Tax Act. Next one, under this method, depreciation is more in a earlier year and less in a later year, which is rational because the benefit derived from the use of an asset is more in earlier year and less in the later year. And another important advantage is this method, the total burden on plant and profit and loss account in the respect of depreciation and repairs of an asset will be fairly uniform year to year, year after year. This is because in the earlier year, the amount of depreciation will be more and amount of repairs will be less. But in the later year, the amount of depreciation will be less and amount of repairs will be more. These are the advantages. Next, drawbacks or demerits of this method. So first drawbacks is this method cannot reduce the book's value of asset to zero. Under this method, it is difficult to fix the correct rate of depreciation. Under this method, the interest on capital invested on asset is not taken into account. Next one, it is very difficult to identify the individual asset if there are frequent additions. Another, this method also does not provide the funds for a replacement of asset. Another drawbacks, under this method, it is difficult to ascertain properly the cost of the goods manufactured since cost of the production per unit will be reduced as a result of reduced amount of depreciation. The depreciation of calculation of depreciation under this method is slightly so complicated. These are the deep merits of reducing balance method or written down value method. So thank you.